Hello and welcome to Module 2 of the Forex Complete Solution Basic Trading course, the Principles of Technical Analysis. What is technical analysis? The definition of technical analysis is a method of evaluating securities by analyzing statistics generated by market activity such as past prices and volume. Technical analysts do not attempt to measure securities' intrinsic value, but instead use charts and other tools to identify patterns that can suggest future activity. Technical analysis applies across all markets, whether you are trading stocks, forex, commodities, futures, or options. A technical analyst believes theoretically that all current market information is reflected in price. If price reflects all the information that is available at that time, then price would be theoretically all one would need to place a trade. A visual representation of this data is contained in a chart. For this course, we'll be studying Japanese candlestick charts, as these are the most recognizable charts offered on most trading platforms. But as we have discussed in the foundation course, there are other charts which you can use, such as line charts and bar charts. The chart is a visual representation. The data remains the same, i.e. the price. So trade the chart that you are most comfortable with. But for consistency throughout this course, I will be focusing on the Japanese candlestick chart, and I will pull one up now for you. Here we have a Japanese candlestick chart, and I will just delete some segments here so we can start with a fresh chart. There we go. Now, the three basic principles that underpin technical analysis are that price action reflects everything there is to know about the price, markets tend to move in trends, and history tends to repeat itself. So price action. There are many factors that can affect price: fundamental data, political events, or an interest rate change. Supply and demand is demonstrated in market action. Basic economics teaches us that supply and demand set the price. If demand exceeds supply, then technically the price will rise, known as a bull market. And on the other side, if we have a surplus of supply and little demand, then technically prices should fall, which is known as a bear market. Price action is the market letting you know what it is doing. There are some famous quotes in the market, such as "do not fight the tape," i.e. do not go against or second guess the market. Remember, the market is always correct. We are just participants. We do not predict what the market will do. Nobody can, but we react to what the market is doing and trade accordingly. Now, market trends. The second principle of technical analysis is that prices tend to move in trends. By this, I mean that if a price is rising, then the higher probability is that it will keep rising. And when the price is falling, then the higher probability is that it will keep falling. So there are three trends we can look at. There's an uptrend, a downtrend, or a sideways trend, which can also be known as the market consolidating or the market going sideways. So another famous quote in trading is, "The trend is your friend." So the higher probability trade is to trade in the direction of the trend. Okay, so I'm going to show you how to put a trend and a basic trend onto your candlestick chart. And again, it's a very simple but very effective tool when trading. So here we have our basic candlestick chart. This is a weekly candlestick chart on the German DAX 30, and each candle here represents 1 week of market activity. So you have opened up this is a pro real-time chart. Again, pro real-time is one of the best trading platforms on the market for using charts. Now again, it's up to yourself, but most brokers will offer a charting platform that will offer candlestick charts. This one is called the Pro Real Time. So find a charting platform that you're comfortable with, and as we discussed in the foundation course, you can use a demo account to get comfortable with charts. But back to our trend. How do we know that the market is in an uptrend from a visual point of view? So up we go to our vertical trend line. So just click on your vertical trend line and we will place it at the bottom of this candle. And this is back in September 2011. We can see it there, September 2011. So put your trend line at the bottom of the candle wick and place it just below the full body of the candle. And I'm going to configure this line just to bring it up more so you can see it better visually. So there we have our basic trend line. Okay, so we can use trend lines to determine whether the market is in an uptrend, a downtrend, or whether it is consolidating. These are a very simple but very effective tool in our trading toolbox. Now, the best practice in drawing trend lines is to identify two major tops or bottoms on your chart and then to connect them. Okay, so we have a bottom here back in September 2011, and we have our top here in October 2014. So it takes at least two tops or bottoms to draw a valid trend line. Okay, two tops or two bottoms, but it takes three to confirm the trend line. Okay, so you want three touches to confirm your trend line. The steeper the trend line you draw, then the less reliable that it will be, and the trend line is more liable to break. Okay, trend lines become stronger the more times that they are tested. So the more times it's been tested, 1, 2, 3, 4 times. So we have our three touches to make it valid. 1, 2 at the bottom, and 3 up here at the top. So it's a valid trend line. So we have our rules in place. And never draw a trend line to fit your own view of the market. Follow the rules and ensure that your trend line is valid. So this is our long-term trend line. So the market is in a bull market. It's since 2011 the market has been buying, okay, and that is from a technical analysis point of view. On a shorter term time scale, we'll put in another trend line. So again, go up to your vertical trend lines and just click, and we put it at a valid top. So here we have a market consolidating. Do you see it was a sideways trend? The market is consolidating. So we put it at the top and we'll connect it to a valid top. So we have 1 touch and 2 touch. It's a valid trend, and we're going to configure it. So we go to configure and we just change the width so it's represented better visually. And again, we're going to draw our trend line at the bottom. Okay, so again, we go to our vertical and we pop it at the bottom, again at the bottom of the candle and just below the full body of the candle. So we can still see in our, again, we'll just configure and the width, and we'll put the width. Okay, so we can see that our longer term trend line is up in a bull market, and on a shorter time scale the market is still in a bull trend. Okay, and this is a basic trend line. So I'll just change this. You can for visual point of view on Pro Real Time, you can build your charts to suit your own needs. So the longer term trend line, for instance, we can place red, so visually it will stand out. So our longer term from September 2011 all the way up to October 2014, we have our touch. Now, why did we find support here? This is where our technical analysis and our fundamental analysis go hand in hand. The bull market from October 2014 is due to the ECB announcing quantitative easing, and that is QE. It is a bond buying initiative that the ECB have launched. Okay, and they launched it in February of 2015, but the news was the news was coming out from October, even before October, but from October 2014 the market was buying the news that the quantitative easing was on the way. And again, we will cover this in more detail in our fundamental course. So again, fundamentals and technicals go hand in hand. We're not just trading off charts or one time scale or one tool such as trend lines. We're going to cover a vast amount in our course to get you up and running and get you profitable as a trader. So just remember, these are just the reasons why the market bought. Okay, so we're in a long-term uptrend, and on a shorter term time scale from October 2014 Again, we have all the data here. We have our high, low, open and close. So each of these candles again represents 1 week of market activity. Here we have a weekly representation of the DAX 30. So we're in a long-term bull trend, an uptrend, and we're in a shorter term timescale uptrend, and we have our support here. Now, trading the trend immediately identifies current market conditions and gives you more confidence in trading with the market, i.e. the trend is your friend, okay? So uptrend 1 and uptrend 2, okay? Now, history repeats itself. This is the third principle in technical analysis. We tend to act the same as human beings, okay? We repeat the same practices over and over again. So why is this important? Well, it's human beings who are trading the financial markets. So price behavior and certain pivot and confluence and support levels tend to repeat over and over again in the marketplace. Market price may change, but human psychology, being what it is, remains the same. So we can use this fact to give us an advantage when using technical analysis. So we can use historical data and prices to gauge how the market reacts under a certain set of circumstances, i.e. a fundamental data release. For instance, like an earnings report of a company such as Apple or Microsoft are releasing earnings. We know in advance that Microsoft, they will tell you when they're releasing their earnings. So on the run up to the earnings, you're going to see how the market will react, and they might release these earnings on a quarterly or half yearly or even yearly basis. So from a historical point of view, you can look back and see how the market reacted to those news events. So these outcomes will never be exact, but we are looking to put the odds in our favor. So the knowledge of prior price action will help us to plan our trades in future. And how can this be represented on a chart? So we have our long-term trend and our short-term trend, and these are horizontal lines, okay, they're vertical lines. So I'm going to put in a horizontal support level now to show you historically what I'm talking about, okay? So here's a historical support level, and I'll just put it in there, okay? So again, we just go up to our horizontal line and put it at a valid area. So this support here, this candle is going back to February, the week starting February the 23rd, 2015. And what happened in June 2015, we're coming into the same area, okay? Historic prices. We're looking back to look forward. So the market has come into support from a February price, and now in June we're coming into the support here. So why is the market selling off here? Again, you need to look at your fundamentals. Today in June 2015, we're looking at the Greek default situation, and right now that is unresolved. So you have the ECB and the various countries trying to come to a resolution on the Greek situation. So right now the market is uncertain, and the market does not like uncertainty. So that's why it hit a resistance. Okay, so resistance is when the market is running into resistance. That's why I have my valid trend line. Remember, 1, 2, 3 touches. Okay, 1, 2, 3 touches on the upside, and that's a valid trend line, and it's off a historical high. It's off a historical resistance point. Okay, and now we're coming into support, off a historical support. So from a technical point of view, our price is being supported. And on a fundamental point of view, the market is selling off because of the Greek default situation. And again, on Forex Complete Solution, we will have a detailed fundamental course on our basic course, a fundamental module. So we will cover fundamentals in detail in a future module. So just be aware that your fundamentals and technicals go hand in hand, and that is what I teach. I teach an inter-market analysis. We're looking at fundamentals and technicals because we want as much data as we can have to get us on the right side of the market. So there's our historical data. We have a long-term trend line, okay, from September 2011, and we have our shorter term trend line coming off October 2014. And why October 2014? Quantitative easing from the ECB. And again, what are we trading? We're trading the DAX 30. That is the strongest index in Europe. So the DAX 30 is going to react to the ECB QE. Okay, so fundamental, technical, and fundamental and technical and historical price level here on our support. So we have we have a horizontal support, okay, and we have vertical support off our trend line. Now just step back and look at that chart. It's quite basic. There's nothing too complicated here. One support level or one uptrend bull market, two uptrend bull market on a valid, and I mean you need to find valid points, valid price, and again we will be covering this over and over again, so you're creating correct charts. And this chart can be left because two things are going to happen here, okay? If the Greek situation gets resolved, the market will hit support and buy back, and that will create the uptrend. Now, if the Greek situation does not get resolved over the summer, well, we might have continued selling. And how will we know that? Our horizontal support will be broken and our vertical support will be broken. And what happens next? Well, we're looking for a major support level of our long-term trend line. So that is our picture of the markets. That's our visual picture, and that is our fundamental picture. And this is what we're constantly doing in the markets. You need to do your homework fundamentally, and you need to do your homework technically. So to be a successful trader, you need to be three things. You need to be a fundamental analyst, you need to be a technical analyst, and you need to be a trader to place your trades. And by the end of this course, you will have all three perfected and you will be on the right side of the market so you can profit from that. So to reiterate, technical analysis is based on objective data. You can look at a chart and see plainly what's happening now. You can see which direction the price is moving in. It is a great tool for timing your entries and exits from the market, no matter which security that you are looking to trade. So as we have discussed, there are a few different types of technical analysis, i.e. Japanese candlesticks, bar charts, and line charts. But generally speaking, it is used to evaluate trends, okay? Technical analysis is used to evaluate trends, to identify significant price levels, and to locate valid trade entry and exit points. And this is where we are creating our wealth and creating our profits. And this is all doable, okay? So this was our basic introduction to the principles of technical analysis. So thank you for listening to our module on the principles of technical analysis, and I hope you can join us on our third module, basic candlestick formations. So thank you very much for taking the time to listen, and I hope to speak to you shortly. Goodbye.